don't have a British economic model, we have an economic muddle.
The world economy is now in slowdown.
Investors see more gains in the short term.
People are suffering.
Must get Brexit done.
Austerity is not an economic necessity, it's a political choice.
The global economy is at a delicate moment.
It's just not paying their fair share.
Consumption-led growth.
Climate crisis.
Automation. Another recession.
Rent and housing costs.
Low productivity.
Inequality.
There are fundamental challenges.
2020 is upon us, and now we have a wonderful opportunity to move forward together.
Hello, I'm Terrace Roberts and welcome to the IPPR Economic Justice Podcast, the podcast that looks at our broken economy and ideas to achieve prosperity and justice from the UK's leading progressive think tank. The UK economy needs fundamental reform, but how do we get there? Drawing on IPPR research and expertise with special guests, the podcast is a space to focus on the major issues and opportunities facing the UK economy. Today we're talking about the shift away from cash and towards digital payments. So that's every time you go into a shop, every time you buy something online, the way in which you pay. Now this might sound like quite a technical subject, but in fact has really interesting questions behind it about the future of our economy and our society. From IPPR, we are joined by economic analyst Rachel Statham.
Hi, Caris.
And we're also delighted to be joined by Marlies Nichols, Head of Programmes at the Finance Innovation Lab.
Hi, it's great to be here.
Thanks very much for coming, both of you. I want to start with you, Rachel, and I'd like you to just talk a little bit about why this topic matters.
Yeah. So we know the future will have less cash, and we know that payments are changing quite fast. We've seen, over the last year or two, kind of norms shift in terms of how people pay for things in shops, whether it's getting used to contactless payments. But we're also seeing increasingly kind of new players enter the payment space, and that has the potential to really shift the balance of power in our economy. Companies like Facebook or Amazon are moving into personal finance markets. So there's kind of two levels to it. At the kind of economy-wide level, we're seeing a real shift in dynamics. And also in terms of people's lives, we're seeing renewed urgency with which people are asking questions about what the future of cash looks like, particularly for those people who still rely on cash to make payments day to day.
Just to spell it out, in terms of kind of Amazon and Facebook entering the payments market, what does that mean for, what are we talking about in terms of how that changes how I might buy something?
Yes, we're seeing kind of new products like Facebook launching an e-wallet. So it's encouraging you to make payments through Facebook. Or in the case of Amazon, kind of new offers of personal loans. Also Facebook talking about things like a digital currency. And those could really kind of shift not just how we pay for things day to day, but kind of how we think about money and who has control over kind of how day-to-day finances work. But it also has important implications because of what that means for data and the kind of data that these platform giants have about our lives.
Okay, so presumably it's also about card payments, right?
Yes, absolutely. Though we're seeing companies that control the card payment market, so the likes of MasterCard and Visa, who are very dominant in that space, having increasing power over how businesses can accept card payments. So now increasingly small businesses are under pressure to take card payments because a lot of people are kind of switching to mostly paying using card payments or other forms of digital payments like paying with your phone or even with your watch now. But they have kind of new levels of power within personal finance markets, and that has quite important implications.
I think it's really interesting that, although we're seeing a whole range of new ways of paying for things, as Rachel said, you might pay with your watch, you might have even a Coke that can pay for something. Actually, most payments in the digital space are happening through your debit card or through contactless. And it is worth pointing out that there are particular companies, well, Visa in the UK, that does run most of the debit cards. And we need to also think about, what's in it for them in driving a shift towards us using less cash. And it is notable that they have had quite an aggressive advertising campaign to basically, I think, shame people actually out of using cash in many cases. So they've described cash as peculiar, and they've also said that they want to try and put cash out of business. And that's really something to keep an eye on because the cash infrastructure is struggling as we shift to digital payments. It's becoming more unsustainable to run. And we need to think carefully as a society whether we're okay with that, because even though some of us might be happy to use less cash sometimes, for example, I didn't use any cash to get here this morning or to buy a coffee. I actually like using cash sometimes. I have cash in my pocket and I want that to, stay in place. And I think a lot of people in the UK do too.
And sometimes it's both, isn't it? So you might be entering your debit or credit card details into one of the platform's apps that then actually process the payment. So it's kind of Apple or Visa. It might be that there's multiple kind of financial and tech providers involved in that transaction.
Yeah, totally. And I think really, with a cash payment, it's anonymous. People, there's no one who's really following what you're spending, where you're spending. But as soon as you move to a digital payment, there is going to be an intermediary who can track what you're paying and where. And ultimately, that's always going to involve a bank.
So on that kind of cash question, so Marlies has highlighted some of the reasons why people still want to use cash. I mean, so at IPPR, we've done research on this, and you spoke with people who do use cash, didn't you, Rachel? What did you find through there? Who is it who is particularly reliant or particularly wants to use cash still?
I think, it's quite important to kind of note from the offset, there's both a question of who needs to use cash still, but there's also, we know that the majority of people in the UK still prefer to use, a mix of cash and digital payments. So we know that low-income people on low incomes are much more likely to be reliant on cash. And from the research we've done, speaking to people about, how they feel about how they pay for things, we know that cash budgeting is still a really important tool for people to control their money. And a lot of that is because of people's relationship with their bank. If you're managing a very tight budget and your kind of final pounds and pence at the end of the month could be hit by kind of unseen charges if something like something you paid for a few days ago comes off your card unexpectedly a week later, and you already thought you'd accounted for that spend. It can put people into overdrafts. They can be hit with really considerable fees, and it can really throw off their finances with quite serious consequences. So cash, is a really important tool for people to be able to tightly manage their money. But it's also a kind of choice question a lot of the time as well, because people might feel more comfortable being able to spend the money where they want without knowing that their bank has a full picture of kind of where they spend every last pound.
And the cash infrastructure point. So what's going on there? Who actually pays for the ability for us to withdraw cash, and how does that play into this debate?
So the UK cash infrastructure at the moment is kind of, we talk a lot about ATMs, and we've seen ATMs actually closing quite rapidly over the last year, and particularly free to use ATMs, which is a really important challenge. People that are still using cash, it's becoming harder to do that, and because of that, also harder for kind of shops or stores on the other side to accept cash payment, because we're also seeing bank branches close across the UK at an accelerating rate. So it means if you're running a shop and you want to be able to take, cash payments, you've got to be able to, take that money at the end of the day to a bank where you can bank that money. And that's becoming increasingly difficult. And it also means people are finding it more difficult to access kind of core banking services, because you're less likely to have a local bank branch in your community where you can go in and speak to somebody face to face about your challenges, about whatever you're facing in managing your money. But cash infrastructure basically is becoming more expensive to run because less and less people are using cash. So the costs are quite static. Running an ATM kind of costs as much, regardless of whether or not fewer people are coming to use that ATM. So there's really big questions about who should be paying for sustaining our cash infrastructure in the UK. And we've particularly been talking about the role of banks and financial service providers who are making financial gains from the shift to digital payments, because they're having, they've got less physical infrastructure to be sustaining. Banks are, having to pay out less to run local branches. And also because it's faster payments and there's opportunities in the data they're getting from digital payments. But we're arguing that they have a role to play in investing into communities to sustain cash infrastructure and to make sure that people are able to access, the kind of payments and the kind of banking services that they want.
I want to get into some of the trade-off between what the benefits, pros and cons of a cash economy are, and maybe a digital payments one. And I think that issue you brought up, Marlies, of a bank being able to see what you're spending and where that's going, being a potential kind of privacy issue, but also, of course, that generates huge value for them in the form of data, particularly when it's aggregated across lots of people, which they can then monetize. That's obviously a huge issue, but advocates of digital payments would also argue that it's precisely that ability to see where money is going, but brings one of its biggest benefits, which is that you can see where illicit financial flows might be going, and particularly in terms of tax avoidance or illegal activity. Is that something, how does that play into this debate? Is that something we should be thinking about and valuing in digital payments?
Yeah, I think that's an interesting argument. I actually don't know the figures on, how much crime or tax avoidance is happening with cash, but I would be very surprised if we didn't see those behaviours happening in a digital payments economy as well. So, and I think also if we think of, if there's going to be large companies moving into the payment space like Facebook or Amazon, we also need to think about the level of tax avoidance that might be happening at that corporate level too. Mm-hmm. I think it's in general a bit of a kind of myth that digital payments are, safer, kind of involve less black markets and things like that than cash. And actually, in many ways, cash could be safer. And it could be, if in incidents of like cyber attacks or natural disasters or IT failures, cash could actually be safer than a digital payment system.
Safer in terms of still kind of keeping the economy ticking over. But surely I can see that, there's obviously disadvantages to this as well. But if money is only flowing through kind of very closely monitored and secured spaces, surely that does just make it harder to avoid the money that you're earning or passing through being seen by HMRC or potentially kind of the police if it's something illicit, because there is a record of it, whereas cash, there isn't.
Yeah, no, I get your point. I think we need to just think carefully about whose interests private firms are going to work in, and it might not be for the state, it might not be for people, or it might well be, but we need to keep an eye on it.
Yeah, I think we have seen, particularly, kind of the work we've done speaking to people in the financial sector through this work. There definitely has, they're strengthening technologies and kind of constant improvement in technologies and tackling both in identifying and then in dealing with kind of money laundering, kind of large scale financial crime. But as Melissa pointed out, there's also considerable questions to be asked about the kind of safety of digital payments. Particularly, we know that kind of 1 in 5 UK adults still lack basic digital skills. So, people aren't particularly safe going online. A lot of people we spoke to, in the process of this research felt that they weren't confident or kind of secure enough to use online banking services or even to make online payments. There's factors kind of pulling in both directions.
I guess also there's a tendency for those of us who work in policy to think that data and information might be safer with the state than with the private sector. But throughout this work, I keep on thinking of Handmaid's Tale, where they all pay on card and then all the cards are frozen for women. And obviously that's a kind of, particular scenario in a fiction novel. But I do think it does highlight the potential control that is offered by something that can be tracked, particularly with the state involved in that regard. So you were talking about, Rachel, about the different groups and how they might be able to access or be less able to access digital payments. I guess kind of turning this topic on its head, if some people are locked out of digital payments, is there a world in which actually that might be better for them if we can improve those digital services?
Yeah, absolutely. So I think thinking now about how we can build digital services that are more inclusive, both in terms of kind of access issues around disability. We still, there's still large swathes of people who aren't able to use kind of chip and pin payments day to day for a variety of reasons. And then also kind of more thinking about kind of banking more holistically and how people can access banking when using cash to make your kind of day-to-day spend, and having, for instance, a carer help you, physically take the money out of an ATM machine and then and for you to manage cash in that way. There are important innovations that we're already seeing happening in this space in the shift towards digital payments. But I think there's still massive progress to be made, and it's quite easy to, particularly if you don't use a lot of cash in your day-to-day life, to find it quite difficult to imagine what barriers might still exist. But there are very real barriers, and we're not really seeing enough incentives for major financial service providers at the moment to develop those services, to make sure that they're serving the kind of the wide range of customers, that everyone's kind of now relying on having access to a bank account. And where that's not possible, or where there's additional barriers in place, there's some quite real challenges. And it's this kind of, it works on a demographic level, but there's also circumstances in which people aren't able to access banking or to make digital payments, people without a permanent address, and that can be from a wide range of reasons. We're seeing some banks respond now to, for instance, with specialist training around financial abuse, where somebody might have left an abusive relationship and not have access to their bank account because it could have been controlled by a partner. And increasingly, we're seeing banks set up services that can both kind of recognise where that might be happening and respond with services that that suit the needs of people in that situation. but also, people who are homeless or don't have a permanent address, kind of recent migrants to the UK. There's a huge range of people who don't have, the ability to just, pay instantly with card wherever they go. And then obviously, demographic factors at play as well. So there's quite a lot of things to be thinking about, and some serious, investment in developing services that can better serve a wider range of people to build a more inclusive, future in the digital economy.
Marlies, you work at the Finance Innovation Lab. What are in your view, can you give us some examples of where you think there are really exciting innovations in the digital space that better serve people's needs? And where is that innovation coming from? What's driving it?
There's a lot of factors that are coming together to create a kind of digital revolution in finance. So there's the wider shift to a data economy. There's, a whole range of new tech and maths and behavioural science. And there's a lot of commercial incentives to cut costs or create better products for people. And then there's also actually what I think was not kind of noticed enough is there's a lot of policy to drive digital revolution in finance. So a major policy that came into place 2 years ago was open banking. And it's really interesting and has opened up a lot of space for new innovations in finance. So I don't know if your listeners know what open banking is.
I think it's worth you explaining.
So the idea is that the biggest banks and building societies in the UK have to open up their data, so that if you're a customer and you want to share your current account data with a third party, you can do through some standard, safe technical methods.
So if you're literally a consumer, and so say I wanted to share my data, I can't imagine a situation in which I would be thinking, right, I want to share my data with a third party. How does that actually operate in practice?
So what would probably happen is you'd come across a new service. Perhaps it's offering to give you greater oversight of your spending and help you to manage your budget. Perhaps it's offering to give you a new type of credit score, or perhaps it's offering to help you manage your savings or move your money out of your overdraft. So you'd come across this service and it'd ask you for access to your current account data so that it could do that. So then you would request for your bank to do that.
And that would be in quite a standard, would you like to request this?
It is actually a little bit clunky.
Right.
It involves going through a few different screens of clicking consent. But the bank would take you through that process.
And what kinds of things has this enabled to happen? Are there some specific examples? Are there?
Yeah, so the biggest kind of growth of new products are either in what's called personal finance management apps. I think, a number of people will be familiar with Monzo, and they've done a really great job at helping people have oversight of their spending, to categorize it, to help you realize, I spend so much money at Pret, I need to change that. So we're seeing more services like that. And then a lot of services also that are helping people to create a more accurate profile of their risk, because the credit reference agencies who typically give us credit scores which determine whether we can get loans, they use quite old models that don't really reflect the way that the economy is changing, the fact that many of us are in more insecure work, or we don't fit the old model. And so those are the two really big areas of growth, and I think they're very interesting. But what we're trying to do at the lab is also think about, can we be more ambitious? What sort of financial services can we actually create that could tackle some bigger problems like inequality, or the fact that we need to transition to a low carbon economy? And I can give you a couple of examples of fellows been working with in that space. So I think one good example is an app called Kogo, and the app is trying to help people spend their money in line with their values. So you tell the app what your values are. It might be that you want to eat in a vegan way, for example. And the first thing it can do is tell you where vegan shops are in your local area. But what the app can now do with open banking is it can also tell you what percentage of your total spending is going towards the values that you care about. So you might really care about the living wage, for example, and it can tell you what percentage of your money is going to organisations that pay the living wage. And it's probably not very much, but then it can help you to change that. Yeah. I think another really good example is Nest Egg. So they're working with the credit union sector. It's a really important part of our financial system that's helping to improve access to affordable credit. And through open banking, Nest Egg are helping credit unions to really improve their loan process. So to make it quicker, cheaper, but really importantly, more responsible and more engaging so that more people will stick with credit unions because otherwise it can be a bit of an onerous process. And to really stop them from going to alternatives, which might be, payday lenders, high cost credit, which are, feeding the really big problems of over indebtedness in the UK.
Those sound really interesting. And do they have commercial business models, or is it a kind of different business model that enables those innovations to take hold?
Yeah, so both of those, if I remember correctly, are for profits. But what we try and do at the lab with all the fellows or innovators that we support is help them to hone their social purpose and to do that collaboratively with civil society because they're the experts about what's socially useful, and then find ways to embed that into their business model, into their team culture, into the ultimately also ownership and governance structures. Sometimes there are barriers to doing that if you want to raise funding. So you need to be a little bit pragmatic. But some of the fellows that we work with will be co-ops or charities too.
I think the example that you gave me, Marlies, of Monzo is quite interesting because it clearly does help a certain group of people budget. However, I've never seen, and this might just be my experience, but I've never seen anyone over the age of 35 use a Monzo card, for instance. Rachel, is innovation in the kind of mainstream setting, so rather than some of the excellent examples there that Marlies gave, but the mainstream innovation, who does that serve, and is it serving everyone equally?
At the moment, who's best served by the sorts of innovation we're seeing, so the likes of Monzo, other rival banks, tend to be people that are already better off, who are already kind of digitally literate, and people who might live in kind of big cities, who are able to pay digitally day to day quite straightforwardly. So the likes of Monzo is helping people very much with questions, as Marlies raised, with how much money they're spending in Pret and how they can perhaps reduce that if that's something they're after. But it is not designed to the same extent to help people who are managing a tight budget, keep themselves out of their overdraft or to get affordable access to credit where they need it. So we've been calling through our work on the shift away from cash for more money to fund innovation with a social purpose, and particularly around innovation in the credit union space, where there's really important progress that could be made and could serve, a whole kind of raft of people across the UK, in financial insecurity by developing services that can help them manage indebtedness more securely.
And what's going on here? Is it about the design of the product, or kind of who it's targeted at, the branding, or is it that people don't have the kind of the skills and confidence to use the products that exist?
I think it's probably a combination, in that there's definitely a bias towards people who are already kind of comfortable using apps or paying using their phone, who are more likely to be using something like Monzo to therefore track their spending on their phone. We're also seeing these types of new services target kind of mainstream people with quite a lot of money. And it'd be quite interesting now. Monzo and other similar organisations are offering things like overdrafts, moving into lending markets, which opens up quite a lot of new questions about what these new financial service providers are looking to do, how they're going to make their money as well. In the case of Monzo, and those are questions that they're kind of unresolved at the moment, but we need to be kind of keeping an eye on in the next few years.
I've got a very straightforward question: is Monzo just a current account?
Yes.
Because I found it interesting, their branding that they've done, because everyone seemed very excited about it, or at least the kind of under 35 group, under 35, so I know who got one. They were like, there's this new app and it allows you to put money in pots.
Yeah.
And then to spend money once you've put money in your account. I was like, wow, that sounds like a current account.
I mean, to be fair to Monzo, I think they did push the sector to help us have a bit more control over our finances in ways that banks should have done that years ago. They could have done that. My concern with Monzo is that it claims to be a kind of democratic bank. They talk about potentially becoming a social enterprise at some point, which I have no idea how that's going to work with their investment model. But, the fact that you can tweet to Monzo or join in forums does not mean that it's a democratic bank. For that, we can actually look to credit unions or building societies.
Marlies, how do you think we can shift the sector as a whole to be more responsive to the needs of people who might not always have the biggest wallets to pay for financial innovation? How do we make sure that financial innovation is actually serving everybody's needs?
Yeah, I think that's such an important question, and I was really interested in Rachel's response, and I thought she raised loads of really great points. I think I just add to that, we need to look at who is designing the products, and actually, unfortunately, the startup world, the banking world is, like much of our kind of society, run by basically lots of white wealthy men, to be blunt, and that means that they're only going to design services with a particular perspective in mind. What we're trying to do at the lab is create more diversity in who has a say over what the future of finance looks like. I think another thing we need to do is not start with the tech and work back to build solutions. We need to start with, the people's needs. What do we need from finance? And actually, in many cases, you don't need technology. Some of the most interesting innovations, I think, in finance are to do, a great example is the network of cooperative banks. We've never had a cooperative bank in the UK. Wouldn't that be great? That's not techie. That's about governance and ownership.
I guess lots of people would have thought that the co-op bank is a cooperative bank. Would you not class that as a cooperative bank?
So the co-op bank was never a co-op. It was run by the cooperative group. Yeah. And I think another thing that we really need to look at is how do we embed social purpose, not just into business models, but into the system as a whole? How can we make sure that regulators have that in mind? And I'm really interested in the FCA's potential shift to more of an outcomes-based approach to regulation.
It's a Financial Conduct Authority.
That's right, yes. So they're the main regulator for consumers in finance. And I think open banking is actually quite an interesting case to look at. So, obviously open banking, it was actually introduced to create more competition in the financial markets. Competition in some cases leads to better outcomes for consumers, but it doesn't necessarily take us there. And we haven't actually seen any kind of consumer outcomes framework for open banking to be headed towards. So I think a kind of overarching framework for regulation and infrastructure to make sure innovation is serving people could be really helpful.
Yeah.
Right.
Yeah, I think that's a really important point. And there are obviously huge opportunities in moving towards a more digital financial world, in that we can better see what needs are currently unmet. We have a much better idea of how people are spending their money, when they might be getting into difficulty, at what point in the month, with what kind of spending. There's also a challenge in that if people who are kind of most in need of a financial system that better serves their needs, if they're less likely to be online now, that's people we have much less data on. So building financial services that can act as a kind of bridge into the digital world is really important if we're going to create a system that actually better serves a much wider range of people. And as we were saying, isn't kind of designed in the image of people who are already very digital and fairly well off.
So we've talked about how financial services don't necessarily of their own accord meet the needs of ordinary people. And we've talked a little bit about the kind of the market power of particular card providers as well as the big tech firms. I mean, to a certain extent, we can control the shift to a digital economy, but on the other hand, the shift is happening and it will happen. Is there a way to shape that to serve people? Is there a way in which the state can intervene to make sure that this doesn't just benefit the big players already?
Yeah, well, we would argue yes. And we think there's kind of three areas that are really key to that. And one is building excellent financial services that work for everyone. And that is about both maintaining access to cash, people who need to use cash or who prefer to use cash, but also building more inclusive digital services. And to do that, we've talked about cycling the gains that banks and other major financial service providers are kind of reaping from the digitization of finance into communities where this transition is actually taking place. And what's important to note there is that this transition is kind of playing out quite differently across the UK. It's not a kind of uniform pace of change. In London and particularly the south of England, pockets there it's happening much faster, but also there's also pockets there where people it's not going to be working for them so far. But we know places like the north of England and the south of Wales, this transition is throwing up a lot more challenges, and we really need to make sure that we can build local solutions. So we're talking about building a digital transition framework where government and regulators and financial service providers come together to really think about what challenges there are and how they can best meet them. And by bringing this, the kind of the banking levy as it currently stands, by reforming that so that we can be investing on the scale that we need to be kind of improving people's digital skills so that they have the option to access these services should they want to. Also helps to strengthen connectivity so that people can actually get online in the first place. And to foster that more inclusive innovation that we need to see to make sure that everybody's needs are met as we make this shift.
And then on the sort of the power of these dominant companies, what do you recommend in your report on that?
We are concerned about this shift potentially if we don't see kind of change now from government and regulators handing a lot of power over to big tech companies who already hold huge amounts of data about our lives. And if they had access to financial data, so they know where we spend all of our money as well, it would give them a huge competitive advantage in personal finance markets. And that can be quite techy, but we're talking basically about strengthening competition rules so that if the likes of Facebook or other platform giants are moving into kind of providing mainstream financial services, they face kind of quite strict regulations potentially around opening up their data so that the data, the insights that they can gain about how people are spending their money can actually be used for public good. So we're talking about kind of compelling these types of companies to open up their data and hand it over to public data trusts, where anonymized and aggregated financial data can be accessed and to be analysed, for other types of companies or organisations, or indeed, the government, where that's kind of appropriate, to build solutions, that can meet these challenges and can be done in a way that that will share kind of spread the benefits of this transition to a wider group of people.
And Marlies, what do you think of those recommendations? Do you think they would be a positive step forwards?
Yeah, I mean, I think it's really important to think about new ways to manage our data, as Rachel described. I think it's really important to have a more collaborative, social purpose, outcomes-based approach to regulation as well, as you've described. And I think, looking to inclusive design of services is important. I think we need to make sure that inclusion isn't just happening in how we might access or buy a service, but it's also happening in terms of the results of those services. I think it's, our data, which will be becoming, collected more, as you've described, through digital payments, it can be used against us. It's not a secret that with more data, some people have already found it harder to access insurance, for example. And with more data, some people are going to find it harder to access credit. So I think we need to make sure we're thinking about those outcomes. And if, we're happy for the market to do that, but as a society, we need to decide how do we also support those people who are going to face greater financial hardship, and there might be increasing inequality as a result. I think potentially there are some products or services, maybe insurance, where we might even want to actually pause innovation and think about what, anticipate some of those negative outcomes and be proactive about creating solutions before we let the market go there and already impact people's lives negatively.
Who's responsible for that? So who is looking across the piece at innovation in the insurance market, for instance, and making those decisions about whether it's the direction we want to go as a society? If anyone. The answer might be no one.
I'm not sure if there's kind of one team that's responsible for that. I think we have a real lack of proactive regulation. It's very much a kind of, we want to see some evidence and then we might act sort of approach. But it'd be great if, the Bank of England, the FCA, Treasury, maybe the ICO were working together on this. And I guess the other point I just wanted to make was I actually don't think the digital revolution is inevitable. I think we need to push back a little bit on that narrative. We really believe at the lab that finance is a human system. We've made it and people can change it again. And if we don't think that a digital revolution is going to work for the UK, we can do things to change that or to shape it in a better way.
And different countries have gone in quite different directions on this, haven't they, Rachel?
Yeah, absolutely. So by international standards, the UK is transitioning towards the digital payments a lot faster than other countries. So the likes of Sweden and perhaps Canada are the only countries that are kind of arguably ahead of the UK in this transition. So as you just pointed out, there's there really is an opportunity to put the brakes on, and to kind of take stock about whether this transition is serving communities, and particularly if it's not, and if we're not able to make the investment that's needed to either open up access to digital financial services, or indeed to kind of ask the pressing questions about whether or not kind of across our economy this is producing the kind of outcomes we want to see, or if it's actually kind of posing more risks than it might be worth. There is that chance. But I think it really needs to be action that's taken now rather than in 5 years' time, because this is I think we're at quite a crucial kind of stage of this transition, in that kind of forecasts show that in 10 years' time, as few as 1 in 10 payments will be made using cash. And I think if we get to the kind of place where a country like Sweden is at the moment, it's very difficult to grow back from that place where a lot of kind of cafes or kind of shops won't accept cash payment, where people are really kind of quite structurally locked out of major parts of their economy and their society. So there's, I think, big questions to be asking now, but really important opportunities as well to shape a kind of more inclusive digital financial future.
And Sweden is such an interesting case study to look at, isn't it? Because they're, as Rich was saying, they've gone cashless much more quickly, but they've actually had to basically find a way to roll back.
Absolutely.
And the equivalent of their governor of the Bank of England has, really called out to try and save the cash system, and their government is even calling on people to make sure they have some cash in their houses in the case of national emergencies. Yeah. So I think, we should learn from them and act now before it's too late and the cash infrastructure just disappears.
So I think we've covered a huge amount there, and probably would draw to a close now. But before we do, can you just briefly each tell me if you're hopeful or fearful for the next decade in terms of the payment system? Marlies?
I feel like I've said a lot of doom and gloom but this podcast. But no, I'm really hopeful. And there are lots of people who are really committed to seeing a future of finance that serves people and planet and are working on this. So there's definitely hope. Yeah,
I'd agree. There's far more opportunities than we've seen even a decade ago for new types of actors to move into this space, for types of innovation that can really think structurally about what kind of a financial system we want to be building. And I think it's a question of, making sure we seize those opportunities now and can ask the tough questions, but also see what action we can take to kind of build the digital economy we'd like to see in the future.
And I'm glad that we could get to a hopeful conclusion on the Economic Justice Podcast. So thank you to Marlies Nichols and Rachel Statham for joining us, and thank you for listening. We hope you enjoyed the discussion. To find out more about these topics and the work of the Centre for Economic Justice, visit ippr.org/CEJ, where you will also find the report that Rachel led the work on this topic. Whatever platform you're listening to, subscribe to make sure you catch all episodes of the IPPR Economic Justice Podcast. And if you found the discussion useful and think others will too, please do share it. We also really appreciate reviews, comments and questions. We'll read them all. Thank you.